The Nifty rises above 23,000 for the first time in a very long time. It's led by positive global cues. IT stocks surge as the US Fed holds rates steady. The market has come off the opening highs but still holding about 23,000 for the Nifty. The broader market's relative underperformer after big outperformance yesterday.
Cables and wire stocks have corrected sharply on intensifying competition within the space as the Adani Group now plans a foray. This follows Ultratech, which announced an entry into the sector last month.
CLSA bullish on Z Entertainment with an outperform rating and a target of 170 rupees a share. The brokerage says risk reward is highly favorable with valuation at rock bottom. The stock surges nearly 4%.
The cabinet extends incentives for UPI transactions up to 2,000 rupees for small merchants. Brokerage Jeffrey says the approved incentives are half of last year and could result in a proportionate fall in adjusted EBITDA. Paytm shares are down by around 4%.
Order wins continue for a lot of the companies as we move towards the end of financial year FY25. Just keep an eye on Paras Defence and GRSC, Garden Reach Shipbuilders, all of them higher. Paras Defence has won an order worth 140 crore rupees from the DRDO, while Garden Reach Shipbuilders has won a road project in Nagaland, among all the other companies which are spiking. It's a solid start. You're watching us here on Chartbusters. We're live to you from CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me, Hormas Fatakia. Across all parameters, the market's doing well. On the mid-cap index, one would quibble that, okay, it's not gaining as much as the frontline indices. But my point to them is that 1,800 stocks are still in the green. The ones which are losing, of course, are, on account of reasons that have come by, be it increased competition or be it some regulatory risks that we're seeing in the likes of Paytm, etc. But what's interesting is the previous chart that came up, the mid-cap index, briefly slipped into the red. From lower levels, we've seen purchase. So dips are being bought into, and the broader markets, in terms of market breadth, is strong. The frontline indices continue to rally, Hormas.
Oh, the frontline indices indeed. Fourth day of gains now for the index, now above the 23,000 mark for the first time after the 19th of Feb. So it's good going for the benchmark indices. The weekly expiry today as well. So we saw some bit of choppiness in the last few minutes, but now we are back towards the highs of the day. A quick chart check with Sachitanand Dutekar of Trade Bulls and some trading ideas as well. Sachitanand, good morning. Thank you for joining in. Now that we are above the mark of 23,000, do we see a move further higher, or do we see some bit of consolidation now that we have gained almost over 1,000 points now from the lows of the 4th of March?
Good morning, almost. Good morning, Mangalam. I think clearly the trend is very strong. We may see this particular rally getting extended towards 23,400, where its 200-day exponential moving average is placed. Primarily, if you look at the last 3 trading sessions, Nifty IT was not contributing, and we have seen a good strong pullback moves in some of the large cap IT stocks. So probably because of that, we may see this particular rally getting extended. A minor consolidation cannot be ruled out. We may see some slippages of profit booking, but I think the support at 22,900 looks very strong, at least for the day. On the higher side, we may see some bit of consolidation near that 23,100 mark, where the call writers have been confident. So I think there could be some range-bound action within this particular range of 23,100 to 22,900, but eventually we may see this particular rally extending towards 23,400.
Wonderful. What about the Nifty Bank? Facing some bit of congestion around that 50,000 mark, and if you could lace that with your individual stock picks as well, Sachi.
Well, Mangalam, I think for Nifty Bank, the hurdle is very evident at 50,000. So unless we don't see this particular level getting crossed, the chances of a momentum-driven rally look bleak. We may see, the Nifty Bank again displaying a pullback towards 49,500. This is where its 50-day exponential moving average support is also placed. So the range for Nifty Bank, looks very confident. 500 looks 5,000, 50,000 looks like a very strong resistance, but on the lower side, 49,500 looks like a decent support. So we may see oscillation there. On the stocks front, Titan is something that we have also recommended to our clients on the long side. Now, if you look at the overall structure, the stock was in a low top, low bottom sequence, but recently we have seen a good surge in this particular counter. There's a rounding bottom formation on its 60 minutes chart, plus the 3100 call writers have been pushed behind. So probably we may see this particular momentum getting extended towards 30 to 60, where its 50-day exponential moving average is placed. And that's why we are still recommending building long positions in Titan. The stop loss for the trade can be placed at 3090 on a closing basis. And any pullbacks towards 3130 would again give a very strong, good opportunity from a reward to risk perspective. So we are recommending building long positions in Titan. The second stock on our radar is Nykaa. Now, if you look at the last 2 month structure, the stock has been oscillating within this range of 155 on the lower side and 180 on the higher side. It has started trending above its 50-day exponential moving average today, and that's why we are recommending it from a momentum perspective. We may see a surge towards 178. The stop loss for the trade should be placed at around 165 on a closing basis, and even here some aggressive long positions can be deployed.
All right, Sachitanand, thank you so much for spending time joining us today with your views on the index and specific stocks as well. Titan and Nykaa, his top picks. Taking our focus to the special segment where we get you a few ideas for profit from Money Control Pro. Khushbu Rai of moneycontrol.com joins us today.
In today's idea for profit, we have Repco Home Finance. The company's established position in South India, especially in Tier 2 and 3 cities, offers strong pricing power, but the asset growth numbers has remained below par. However, the structural changes by the new management is proving fruitful, and the disbursement is guided to grow in the range of 25 to 30% on a sequential basis in Q4 FY25. The company also expects gross stage 2 numbers to reduce by 100 basis points QOQ to 10% in FY25, backed by higher recoveries and better asset quality of the newly disbursed loan. Also, the fresh sanction by the NHB in Q3 will lower the funding cost and help the company to maintain margins at the current levels. If we look at the stock performance, Repco has underperformed most peers and is trading at a deep discount. However, we feel that the stock should command higher valuation due to the healthy profitability and benign credit cost. This will, however, be contingent on the company's ability to generate higher loan growth on a sustainable basis.
Right, with that, we'll step into a short break, but don't go anywhere. On the other side is a special conversation lined up with the management of transformers and rectifiers. The managing director, Satyen Mamtora, joins us in our studios to discuss their latest order win, but more importantly, prospects for the company looking forward as well. Welcome back. You're watching us here on Chartbusters. A lot of stocks doing a lot better right now. Aditya Birla Capital has moved to the high point of trade. BSE itself has moved to the high point as well. Remember, the stock has exited F&O band. We pointed the possibility of that yesterday. And while shipbuilders are doing well, think about shipping companies. Shipping Corp of India is up around 12% as well. So a lot of mid-caps actually seeing a fair amount of traction, double-digit gains for, Shipping Corp of India. That's Garden Reach Shipbuilders up on account of an order win that has come by as well. But speaking about order wins, transformers and rectifiers, that's the company on our radar. From the start of 2025, the company has backed a bunch of orders. We have Mr. Satyen Mamtora, who's the managing director of the company, who joins in. Along with him is Mr. Rajora, who is the CFO of the company as well. Both the gentlemen in our studios. Thanks a lot, sir, for joining in.
Thank you. Good morning to all of you.
Good morning. When we started this year, you had an order book of around 3,700 odd crores.
Yes.
But after you kept winning orders,
yes.
And the last known order book publicly that you had spoken on CNBC-TV18 here was close to around 4,200 crores.
Yeah.
If you could give us a sense of where does that number stand at right now? The incremental orders that you've gotten so far, are they at a blended margin higher than your 14-15% range? And what kind of order inflows are you targeting for the remainder of this year? That's around 15 days and all of next year.
Yeah. So currently we just won one order from Jetco, which is around 726 crores. The margins are slightly better. Around 16%, yes, and the next year we will be closing at around we are targeting around 3,500 crores, and in terms of that is sales revenue, and in terms of new orders book, we should be close to around 8,000 crores by end of next year.
So that's the order inflow that you're targeting? Or
order inflow, new order inflow we are targeting by the end of next year.
So you're targeting 3,500 crores in revenue is what you said, and then the rest of the sum that you mentioned is for the new order inflow, right? So the current order book that you have, by when do you expect to execute that over a period of time?
So the current order book that we have, 3,500 crores will be executing this year, and the remaining is in the first quarter of next year.
Oh, so you mean by this year? You mean by FY
the coming financial year.
In FY26, right? Right. Fair. And what is the mix in the order book that you're seeing? Your exposure to state government utilities and to enterprises as well.
So major of our order book would be from Power Grid and NTPC and likes, and then other than that we are targeting EPC contractors. And some boards which are our favorites or which are close to us, we also quote to them. So Gujarat being one of them, it is our home board. So we have, this is the largest order in the recent past that JETCO has also given to somebody.
What about exports? You know, you had earlier guided for about 25% share coming in from exports, understandably due to weakness in the international markets, that in the third quarter accounted for just about 10% in your overall sales. Where does that number stand?
So that would stand at around 10%. But in the recent past, we as a company have decided that first we will do whatever needs to fulfill the needs of India.
Okay.
So we are targeting now India first, and close to 10% exports is what we are targeting, not beyond that.
But is there a compromise on margins? Is there a possibility that
there should not be a compromise on margins. The margins are almost the same. But we have to currently focus on the needs of India in terms of electrification of India.
Well, Mr. Rajora, you mentioned, you guided for 14% margins. Now, the orders that you've won, as Mr. Mamtora was also saying, that are on better margins. Do you expect that figure to trend higher, or do you stick to that 14% band just because to be on the conservative side?
No, the margins are slightly improving now. Actually, year by year, if you see the margins are improving. Even if you see the quarter by quarter, we are increasing the margins in that way. And our target is to reach to around 17% margin levels in next 2 years' time. So we are actually guided on that side. And basically, the focus is not to increase the margin by increasing the prices. The focus is to bring the operational efficiencies as well as to get the better margins by way of implementing the backward integration activities, what we are doing. So we are expecting that these are going to be the better margins for us, and on the console basis, we'll have the better leverage on the margins once our backward integration activities will be in take place. And you had asked one question that what is going to be our order book by end in next 15 years time. As on today, we have around 5,200 crore order book. And we see that we'll be closing somewhere around 5,200 to 5,300 crore order book.
Maybe about similar levels.
Similar
Next 15 days, maybe at best 100 crore.
Because we'll have to leverage out the revenue what we are doing in this month also.
So, since you're talking about the next 15 days itself, the first 9 months of this year, 1350 crores top, roughly is what you've done on the top line. Your target was 2,000 crores. You'll cross that, or you'll just about?
We should be around 2,000 crores, 1950 to 2,000, somewhere between that.
With 14.5% sort of margins.
Yeah. Yes.
And you had given us a glide path of margin improvement all the way up to 17% by FY27.
Yeah.
Next year, on a 3,500 crore revenue, what are the margins that you would do?
We are expecting somewhere around 15 to 16% margin.
What about the current capacity utilization that you have with the orders that you are winning? Do you plan on expanding capacity going forward as well? CapEx plans for the next year?
Yeah, so we are currently expanding, and our expansion would be finished by 1st April. Our new plant, the expansion will be operational on 1st of April. That will add about 15,000 MVA in the current. And after this, by end of this year, by 1st January, we are expanding to 22,000 more MVA. So our total capacity in terms of MVA should be around 65 to 70,000 MVA.
By
1st January to 2026.
2026.
Okay,
And
so
how
that's
much?
the third quarter FY.
Third quarter FY.
How much do you plan on spending to get to that?
We have almost
basically in entire capex we are expending around incurring around 500 crore rupees capex in the present year and coming financial year, right? And the next capacity expansion of 22,000 crore rupees, 22,000 crore MVA, what he has said, it is going to be on the extra high voltage transformers side.
And extra high voltage, I presume, are
The
margin is
400
Yes.
kV and the 765 kVs.
They are the need of the hours. Right?
That is where the major focus of India is currently, in terms of laying the cables and electrifying every single town or a village. The 765 and the 400 kV will come in picture,
Right.
and then the distribution transformers or the small power transformers.
You're also entering the solar and hydrogen transformers, and
Yeah.
in that, I remember the last time you joined us, you said that you have a head start ahead of everyone else when it comes to capacity addition. If you could give us a sense on where you are on that versus the others.
So currently we will be adding 15,000 more MVA in terms of, approximately 8,000 MVA in terms of solar and solar IDTs and green hydrogen transformers, and around 5,000 MVA in terms of distribution transformers.
Okay, and I'll have to ask this to the CFO. 750 crore QIP provision, when do you launch it?
No, there is no plan as of now. It is basically enabling approval what we have taken from the board, seeing that if any good opportunity comes and we want to leverage on that, right? So then if anything requires, we'll be coming on.
So that enabling provision lasts for a year, right?
Yes.
So how long do you have left for that?
We have entire year left for that.
So no plans as of now.
No, so we're looking at inorganic growth opportunities that if we can find some. It is faster to grow inorganically than grow organically and build plants. And
So we can hear something in the near future?
Sure.
sure, we should.
All right, gentlemen, thank you so much for spending time and joining us today. Wish you good luck for the rest of the year.
Thank you.
The management there of Transformers and Rectifiers India. We take a short break, and here's a small programming note as well for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can scan the QR code now and submit your entry for the SME Champion Awards Season 2. Take a short break. Back on the other side. Welcome back. It almost seems like an Ultratech 2.0 moment for these wires and cables companies. The second time in just under a month where most of these are down after competition intensifying in the space after the Adani Group announcing a foray. KEI Industries is now down almost 15%. Polycab is down 9%. So two of them seeing the biggest knock in today's trading session. Of course, Havells and Phenolix too down around 4% each. What is also not doing well though today is Vodafone Idea, and it's a likely setback for the company and Bharti Airtel, and that's because the government sources have told CNBC-TV18 that the proposal to waive off the AGR penalties is no longer being considered. But the telecom department has the option of sending another revised proposal. Ashmit Kumar now joins us with the details. Ashmit, what does this mean for these companies now?
Well, indeed, a setback coming in as far as telecom players, the likes of Airtel and Vodafone Idea are concerned. The players who had been hoping for some relief in the form of an AGR waiver. Bear in mind that the DoT had contemplated and had put forth a waiver program under which there was a proposal for waiving of 50% of the interest component of this AGR demand and 100% of the penalty and 100% of the interest on penalty component. This was the proposal that was floated first by the DoT. It went through the motions, first the DoT, then the Finance Ministry, also went up to the Cabinet Secretariat. However, what highly placed functionaries within the government tell us is that there will be no further consideration under this proposal that had been put forth by the DoT, the Cabinet Secretariat sending it back to the DoT, saying no further consideration. Again, a confirmation being received by highly placed government functionaries. Now, bear in mind that this decision by the Cabinet, importantly, comes at a time when the Supreme Court repeatedly has refused to budge as far as the AGR demand is concerned. The telecom companies, the likes of Airtel and Vodafone Idea, have repeatedly tried to impress on the court that there could be computational errors, there could be arithmetic errors, there could be possible double counting. However, the Supreme Court refusing to budge, and it is only after the Supreme Court's refusal that the DoT had begun to contemplate such kind of relief. However, we're given to understand no further consideration, at least as far as this proposal is concerned. That shifts the focus back to the DoT. Is there room, is there flexibility for coming out with a revised relief package? That's a question that the telecom minister, that the DoT will now have to answer. Back to you.
Thanks a lot for putting clarity on that, Ashmit. Most analysts on the street weren't factoring any sort of relief coming in their models itself, but the optionality of that could have been a positive. But, from a stock market standpoint, a bigger negative for Vodafone Idea and Indus Towers than it is for Bharti Airtel, and which is what we're seeing in the form of reaction as well. Bharti Airtel currently at the high point of trade in line with the way the market's moving. But if you look at Vodafone Idea and Indus Towers, from yesterday's high, they've seen a bit of a knock. And the intraday chart of Vodafone and Indus comes up for you. Right now, we see them lowering further. So at the low point for Indus Towers, and so should you see Vodafone, which is again at the low point of trade itself. So that's about the telecom space. With that, we are wrapping up on this edition of Chartbusters. And as we do that, here's some good news for all you viewers. India's business news leader is now just a click away. That is CNBC TV18's all-new app that comes up for you on the screen. Instant access to breaking news, in-depth articles, and financial world updates. All of them at your fingertips. You can download the CNBC TV18 app now from either the Apple Store or the Google Play Store, or just scan that QR code which comes up for you on the screen.